Thank you. I'm really excited to be here. So just quick, again, I'm really pumped because being virtual, everybody thinks, oh God, it's just going to be so weird. It's not. It's actually, I think this is my 10th virtual pitch competition that I've done, or a seminar leading up to a pitch competition. And they're actually kind of fun. They're a little bit different. So I'm going to share a little bit about who I am and what kind of pitch competitions that I do. And then I'm going to go through my deck, which really is it's an aggregation of what I've learned over the years. I've spent most of my life on Wall Street. I was an investment banker, running new media investment banking for Oppenheimer, which was my longest career. Moved to Boston about 6 years ago and decided to create a small investment and investment banking boutique. So we invest and we also raise capital for small companies. In terms of giving back, most of them are women and minority-led companies, but not all. And I have a relationship with MIT and Techstars, so I take a lot of companies coming out of those two entities and help them raise capital. We invest in them and we go on their advisory board or their board as a fundraising board member. I also, as I said, do a lot of pitch competitions up here. In addition to Techstars, I do MIT Inclusive Innovation Challenge, MIT Enterprise Forum, Learn Launch, which is an ed tech accelerator, New York Business Plan Competition, Rice University Business Plan Competition, Cambridge University in London pitch competition. I do a lot of those. I don't get paid for them because I love pitch competitions. I think, and I also do, I guess the most amazing thing I do is something called NIFTY, which is National Foundation for Teaching Entrepreneurship. And it's all to underserved high school students. And that's really fun because it's amazing what you can find coming out of high schools around the country, where you don't think there's a lot of talent, and there's a lot of talent. So I'm delighted again to be here today. What JJ has asked me to do is share my experience with you. And you guys are about, as I understand it, about to compete in JJ's competition. So I'm just gonna go through the ideas. I have a bunch of slides and we can do Q&A during it. I think what makes the most sense is let me get through the first like 20 slides, which is all about what you need in terms of your pitch and your presentation to make it the best, to crush your competition, right? And then you guys can, I think it would probably be more constructive for you to ask questions then. We're gonna take a bio break or coffee break, however you wanna phrase it. And then I'm gonna give you some examples of horrible pitch decks and good ones, and some that you think are horrible, but they still raise tons of money. And then we'll wrap up and we can go back to Q&A. So let me start with what makes a winning pitch. Sorry, that's an old slide. So let's just go to the next slide. Setting the stage, right? So JJ gave me some information about you guys, and I think you're more sort of in between the two, but a lot of what I do is at the college level. Let me get rid of you guys. There we go. So at a college level, we're going to go through what I think of as freshman, sophomore, junior, and seniors, but you're kind of creating your MVP. You're getting going. You're kind of building a team. You have you're mostly all part-time. You have to have a job to pay for your bills. And you may have gotten some friends and family funding, or maybe none, or maybe you're starting to get seed. And then, of course, there's more big companies that are already, generating sales. So I think from what I understand, you're sort of in between, maybe closer to one, and I'm going to keep that in mind as we go along, but you can educate me as we go along and straighten me out. So bottom line, in order to win a competition, you need a crisp, clear, well-reasoned pitch deck, and then you need to communicate it, right? So you have to have your act together in terms of hitting all of the key elements in what goes into a pitch deck. Guy Kawasaki says it should be 10 slides. I'm not sure that's the case. It should be, you need to have a lot in it, right? You need a lot of heft, but it has to be very succinct. Just the big, broad brush strokes. And then you have to rehearse it, and how do you pitch it? How do you convince a VC? I always think of the VC, but it's kind of the same thing when you're pitching to a judge at a pitch competition. How do you convince them that you are credible, that you're going to make the money, and that you will be so good that I will give you a check before you leave, right? So that's the overall objective, and I'm going to try to get you there. Right, so there's two distinct aspects of creating a winning pitch. The stake, I call it the stake and the sizzle. The stake, which you put your critical elements out there, you put them in a great pitch deck, and it's also a well-formatted, well-thought-through pitch deck. And then the sizzle, right? So even if you're shy, even if you don't really like standing up in front of people, you can do this. You can get in front of a mirror or get in front of your parent or your girlfriend or your boyfriend and pitch it until you nail it, right? So those are the things that we're going to cover today. You need to do both. Point is, you can't BS your way through winning a competition. You know, you might be really good in your feet, but you didn't quite get your deck right. It's probably not going to work. And you also, you need to put all the right elements in it. And you also have to demonstrate that this is real, this is authentic. You know, you've created this from your heart and soul. It's something that you understand, you're throwing yourself into it, and you're committed to it. And that's what judges and VCs look for. So where to start? We said keep it short, simple. I like to think about it as a tweet, right? So writing a good tweet, in the beginning of Twitter, it was really hard to put everything into just a few characters, now more. But it forces you to really be efficient and effective. So what we do with a deck, and I know some of this is repetitive for some of you guys, but bear with me because I do mix it up a little bit. It's not exactly what you've probably learned in college or whatever, you know, lean startup, whatever, lean canvas, whatever you've used to create your deck so far. So it's clear to me that if you tell a judge or VC, there's a massive problem out there, mind-numbingly horrible problem, you get their attention, right? Always start with the problem and be very clear about what problem you're solving. How did you come to experience this problem? You know, what were you doing at the time? Very succinctly, don't read what's on your deck, but tell us a quick, short story. I was at Oracle and I was using software and it wasn't effective and I created my own, right? So make it personal and authentic, very crisp, efficient. Once you've laid out that problem, now you're going to state the solution. What did you do? So you're at Oracle, and that's kind of a complicated problem, but we can use that. You're at Oracle, and you realize that there's a better software solution that you created, and how you can, you know, did you go to Caltech? Did you go to MIT? What kind of background did you have that allowed you to see this obvious solution to this massive problem? And then, yes, and putting it in a, you know, using pictures of what the solution is, you know, very like one at a time. You could have 2 or 3 pages of solutions. Make it very understandable so that no one's scratching their head. Now, gets more complicated from here, right? So how do you define your market? And this is kind of a watershed event because you can suss out whether someone's really done their homework on the market slide. So one of the easiest ways to do this is you need to tell me who that end user is. What does that end user look like? Who are they? Is it an enterprise? It is a human being? A human being that's going to buy, you know, your lemonade. Is it a 12-year-old? Is it a 25-year-old? Where do they live? How much money do they make? Right? Are they Caucasian? Are they Latina? You know, tell me. That makes the VC understand that you nailed it. You understand what you're doing. So now that we know what the end user looks like, tell me about the market. You know, you can say, well, I want to own the lemonade market. I'm going to have the #1 market share in the lemonade market. Well, people will discount you for being insane, right? So you want to say, well, actually, I'm just going to sell lemonade where I live in LA. and I'm actually just going to sell it in Beverly Hills and Century City. And I'm only going to sell it on Sundays. So that's, now you're reducing your market from a total market, total addressable market, specific addressable market, so that people can understand that you're not a lunatic. You understand, and you're a realist. You're going to go after that market, and you're going to ramp up your company to just nail that. And then you might expand like Uber did, to go from California to the country, to the world, right? So what I thought was, I teach at Babson. Oh yeah, I forgot. So I used to teach at MIT. I teach at Babson and BU now as my side hustle. So I'm going to just take you, since we have a lot of time, I'm just going to take you quickly through what that sizing of the market exercise looks like. And I apologize to some of you that may have taught this course yourself or have had much better teachers than me, but it's really important to get this right. So peeling the onion, right? Again, who is that exact person who's going to be your end user? And which is going to take you to competition, but we'll get there in a minute. So we're going to talk about the exact market, the geographies, as I said, market segment. And then we're also going to get to, you're going to ask a lot of, you want to demonstrate that not only can you envision who the end user is, but you've done a lot of research to understand that that is why you envision that end user. You've done questionnaires, you've gone on the street. If you're selling croissants to a bakery, you've gone to all the bakers and you've asked them questions and you've recorded these questions. You're not going to show it in your pitch deck, but you're going to let me know as a VC or a judge that you've done a lot of legwork, right? Your sneakers are worn out. You've done all the right work. So now let's go back to the lemonade market. So you've decided to just drill down in Beverly Hills and Century City, mostly selling Saturdays and Sundays to, I don't know, to people coming out of church, right? Now it's attributes. Now I'm going to give you a real world example. So I think we beat this one to the ground. So we started out by saying we want to sell lemonade to a market, right? And we're going to build from that market that we know we can sell to and go bottoms up. So we're going to say, we're going to charge, when you get to sizing your market, you're going to figure out how many people there are that would be in that, in Century City and Beverly Hills on a Sunday coming out of church, right? The other thing you can do is start by saying how many people in Beverly Hills and Century City buy lemonade. And we're going to own 2% of that market. It's not a very effective or believable methodology, but you should do both, and I'll show you why. Again, so this is where we were going before, the big potential market, boiling it down to addressable market, the segment addressable or specific addressable market, and then what you think you'll get out of that market. All the people coming out of church, how many are going to drink your lemonade? Not how many are drink lemonade, but your lemonade. So that's the funnel, right? So whether it's, this is another example I'm going to go through in a minute, but as I just mentioned, people coming out of church Sunday, lemonade drinkers, right? And you're going to put them in a funnel to get your target market. So I at Babson, I use a real world example. I changed the name of a company I actually invested in that sells boxes of toys for 25 bucks a month, rent boxes of toys, kind of like Rent the Runway for toys to parents who don't want to buy toys because their 3-year-olds get bored with them and throw them away. So it was a very interesting company. It was sold. I made a little money, not a lot. And it was called Toybot. It was called something that I can't tell you because they don't allow me, but we're going to use the name Toy Box. So the way they looked at the market was they wanted people, households that earned 100K or more, that are willing to spend money on these mostly Swedish toys, educational toys, right? Households with at least one child that was under 5 years of age. And they started with 4 SMSAs, you know, regions around cities. They also now, not only did they think about the 100K under 5 in the 4 areas, but they started to understand, based on market research, what does that person look like? And this is literally how the founder of this company looked at who that person was, right? Working mom, blah, blah, blah. Okay, you can read that. This is literally from their website. So you need to be able to, again, I can't emphasize how critical it is to know who that is and be able to articulate it. So this company did the math, right? So the bottoms up was, so the 100,000, so how many of those are there? There's 30 million households in the country that have 100K or more. Of that, there are 4.5 million that have kids, 1 or more kids under 5. In those 4 metropolitan areas, there are 450,000, right? And if each one bought $25 a month every year, there would be $135 million of income. We then looked at, okay, so let's do a tops down, right? So if there's $5 billion of toys a year and 9% of those would rent toys, that's $450 million. Of that group, those that earn over $100,000 are half of that are 225 million bucks. And half of that are in the 4 regions that we identified. They're big regions, right? That's 112 million. So the 112 million isn't that far off from the 135 million. So it's kind of a sanity check. Like, so we're not going to make a fool of ourselves if you have a good judge that says, wait a minute, how can you tell me your addressable market's $112 million? Well, we did a lot of work to get there. But by the way, if we go another route, it's a close bogey to the 2 numbers kind of go together. So, and again, I used Uber as an example before. Uber only did a tops down analysis in their first pitch deck, which I might be able to show you later. Their original pitch deck, which was horrible, and yet they became the Uber that we know today. You can see what they did, right? So they looked at cities that had smartphones. They looked at the size of that market, potential market without smartphones, that should say with smartphones. And the target market was 18 to 25-year-olds, 25 to 35-year-olds. So the point here is they were hoping to get 100% of the market. They didn't because of Lyft showed up, but they got a lot of the market, right? So you can't assume that you will ever be taken seriously if you look at a tops-down approach, but it does happen. That by way of example. So know who your customer is. I don't know if you remember pets.com, you're all too young, but pets.com was kind of a joke during the 2001 dot-com bubble. And they took every Super Bowl ad. They were everywhere because they raised so much money and no one knew, they didn't know who their market was. So they just blew through the money, went out of business. Know who your customer is. Okay, so now that we understand who our customer is, let's figure out who our competition is. So everybody during my MIT pitch competition last night, there was literally someone who on this slide showed that there was no competition. There was only Google Docs and old-fashioned paper. It was a digital questionnaire company. It was a very bad idea. Everybody has competition. And it turns out that they did have competitors, and the judges, while we were listening to the pitches, did some research since we're sitting around in sweatpants, right? And we went on Google and realized that there were several competitors, and it did not go well for the presenting company. So there's always competition, one way or the other, right? And what you want to do is you want to obviously differentiate yourself. What's your secret sauce? What do you know that they don't? What's your approach that they don't have? So you want to put your competitors, unlike like people from last night, state who they are and just show what the attributes are. You know, Lemonade, they don't sell on Sundays. They don't sell in Century City, or they do, but they have cheap lemonade. We have great lemonade. And then of course you want to put You want to put yourself, you want to make it look good for you, but you don't always want to put it in, obviously, in the upper right-hand corner. And I'm sure a lot of you, I hope most of you have done this for your pitch competition this week, because it's really important. It gives the VCs and the judges a sense of where you are, and you know, what does your industry look like? Yeah. So when Airbnb got started, they used to be Air Bed and Breakfast. This is how they dimensioned the competition, and they did a good job. It was a horrible deck, by the way. I hope to show it to you later today, but they got this right. So now you have to figure out how to reach your market, right? So it's business model. You need to tell us, how are you going to make money? What do you charge and who pays the bills, right? And so I'm not going to go into too much detail on that. We're going to get there. I'm going to go through the financial model with you, and the financial model will embrace this, because you already know who your customers are. So we go to the lemonade stand. You know you're going to go there on Sundays. You figured out, based on competition, whether you want to have expensive lemonade and you're going to charge more, or you're going to have average lemonade, you just want to charge less so you can have a bigger share of market, et cetera, and what your competitive advantage is. And so we'll go there later, but you have to, we're going to put this in the financial model, but you need to tell investors and judges how you're going to make some bucks. Okay, so this part, I don't know if you all had time to do this since you are between that 1 and 2, like coming out of college, and also, or having a baked kind of a more senior status in terms of where you are in the life cycle of your company. You want to show people basically milestones. You know, we started here a year ago. We bootstrapped. My uncle gave me $20,000 and we hired someone full time. So you know what a milestone chart looks like, but it's very important. And you also want to show, has anyone used your product? How many, if it's a freemium product, how many freemium users do you have? How many paying customers do you have? But then show them where you're going every quarter. And that gives people comfort, right? So we're going back to the business model, because now we're going to go from here into marketing and sales financials. I'm not going to spend time on that. We're going to go to the team. And I just want to go through this before I put the financial model at the end, because I don't really want to see numbers if I'm looking at a pitch deck until toward the end. Again, you have to tell people how you came to define the problem, how you came to conceive and create the solution, and what credentials do you have that would even convince them that you're up to that task, right? And who are you surrounding yourself with? If you're a product person, but you need technology, what tech genius are you bringing aboard now, or have you identified to bring on board? Who's going to go full time when you raise the bucks? Financials. Okay, so now this marries all of these other elements together. And I am a believer in creating a financial model. I'm going to get there as to why people hate financial models. Unless you're an accounting geek or a numbers geek like me, people hate doing models, and that's the wrong approach. It is the language of business, accounting, financial modeling. VCs get it, they want to see it. And by the way, when you wake up in the middle of the night thinking about your lemonade stand, you're going to think about, you know what, I think I could sell double the amount if I looked at the amount of salespeople I have. If I increase that and it's going to cost me an extra $200 a week, I can do $600 more in sales. So even though you don't think you're modeling, you're always modeling. And it's better to have a rubric and a spreadsheet that you can put these thoughts into. And so everybody needs a good spreadsheet. Don't make it unconsumable in a pitch deck, right? Make it short, 3 years out, only 3 or 4 lines, right? Revenues, expenses, profit. You want to show how much money you're burning, right? Your monthly burn rate, and which is going to tell investors and judges how much money you need to raise. If it's too much, they're going to think your business is unsustainable. So we're going to get there in a minute. And also, what are your key metrics, your KPIs? Is what are your sales? What are your, maybe you want to have 1 million freemium users so that you can start selling your premium model, and avoid hockey sticks at all costs. Everyone's onto that. VCs, anyone, people sitting next to you giggle. Some hockey stick growth. Sometimes Uber did have hockey stick growth. Sometimes you can justify it, but you better really be careful about that, because no one likes to, I don't know how you can see this. No one wants to see that. So as I said, it's intimidating. I taught this at Babson. I taught this to actually something called WinLab, which are women that are already created businesses. And it was a course that I took on, and it was fantastic. It was women that had their own businesses, and at night I would teach them some skill sets about building, raising money and how to build a model, what I'm doing with you guys today. And I don't know what it is, but this group of women, very smart, said, we don't really like doing models. And I convinced them, or I tried to, that it's your best friend, build a model. So I'm going to take you through, all of a sudden it's going to go white in the background. I'm going to take you through some of the slides, like I did with marketing. Hopefully it'll be more interesting, about how to build a financial model, or what elements to stick in it, right? I called it walk the walk, walk the financial talk, because you need to do it. As I said, talk about it. You need to interact with your investors or your customers, or talent that you're trying to recruit. You're going to need to really talk about financials, right? And then that will get you to the term sheet, because you're never going to be able to say, I'm going to raise $2 million and I'm going to do it at an 8 million pre-money. Investors will say, well, why? And you have to take out your model. So this is going to keep coming back. It's a gift that keeps on giving if you do it right. So yeah, so these are just slides from my deck at Babson. So you can see in a financial model, when you acquire a customer, CAC, I'm sure you're all familiar with that. So CAC and long-term value of a customer, you can calculate from looking at a financial model. And that really defines the sustainability of a business, right? Because if it costs too much to acquire a customer and you have high churn, if it costs you $100 and they give you $50 of revenue, but then they leave, well, that's not a long-term business, right? That's a crappy business. So this is all going to come out in the wash here when we do our financial model. So here I go through everything from how well, remember, so when we talked about our specific addressable market, we said in the toy case, we're going to have a certain percent of our market in those 4 areas. Over time, we're going to really penetrate that market. I've forgotten what number we used, 25%. You have to show that in your model. And is it reasonable to have that much of a market share? And then how much does it cost to get there? Are you leveraging social media? Are you putting ads in a newspaper? Are you putting up billboards, right? So there's a cost of getting new customers in. And again, we talked about churn and how long do they stick around? Every venture capitalist is laser focused on that. And then we start looking at how much money you're losing every month. Most businesses start losing money out of the box because it takes a while to generate revenues and get your team up and running. What's your burn rate going to be? Based on that, how much money do you need to raise? And be realistic. You got to pay people. You got to have, in the old days, you had to have an office. I guess you don't anymore. And you also have expenses associated with creating your product, et cetera. So you need to raise the right amount of money. And you have to figure out what the company's going to be worth based on that competitive analysis, guys that have already been acquired, right? And we're not going to go into valuation and exits today. This is from the Babson course, but ultimately you all probably want to make a lot of money, right? At the end of the day. So you want Oracle or Salesforce or Lemonade Inc. to come and buy your business. So we can touch on that later in Q&A, but I don't want to go through it too much today. So we talked about KPIs, right? Key performance indicators. You need to discuss that in a deck, but it's probably, so you're going to go through it, as we said, but just be familiar with the terminology, KPIs. You're going to be asked about it a lot. So what do you think your critical KPI is to achieve success? What keeps you up at night? Is it the cost of acquiring a customer is going to go up, or they're going to go to another competitor and you'll have churn, et cetera? So just want to go through that. Okay, so again, make it look normal, believable. Sustainability. We already went through all of this. Monthly MRR, ARR, I think you guys are familiar with that. I don't want to spend too much time on it, but so the jargon with, in pitch competitions, you will be asked that often. Can you sustain your current MRR? Can't look sideways. I'm sure you already know what that is, ARR. We don't have to go into this either. This is, again, is from Babson, but it's I can send you guys this deck. JJ can send it to you. It's kind of how you figure out what you're worth, how to raise money. Like at Rice, they raise, the guys that pitch us raise money on the spot. I mean, it's the largest pitch competition in the country in terms of giving money, but there are also angel investors that literally are handing out checks to the winners of the competition. So they all are very schooled in whether they're freshmen or seniors. We're not going to go into this. Again, this is very important. That's why you want to create a financial model. So I think we've covered all of this. Yeah, and so the issue is the reason that there's only 10% success rate in early stage businesses, 90% go out of business, because they didn't raise enough money, right? And their financial model wasn't good enough, or that's one of the reasons. The other one is they really didn't understand their market and the end user. So they couldn't even get through past a seed round. They're gone. So keep that in mind. Yeah, this is how I motivate my Babson students. Oh yeah. Yeah, make sure your financial model is a good one. All right, so we've come through a lot. We're going to get to defensibility and IP. So the other phrase you're going to hear in pitch competitions, I'm just keeping track of the time, sorry, is what kind of moat do you have? It's like, ooh, what do you mean? So you think of a castle with moats and sharks and alligators in it. Investors and judges want to make sure that someone's not going to eat your lunch that's standing right behind you. So the competitor that's just watching all your moves and is going to steal your strategy and maybe beat you on pricing or quality of product or smarts or ability to gain market share. So you have to have a slide somehow on competitively, why are you apt to succeed and beat the competition? And it can be IP, it can be trade secrets. It also can be first mover advantage. Well, I'm there first, right? No one came up with Uber before Uber. And so they had this massive greenfield opportunity that they went after, and they nailed it, obviously. So defensibility and IP, very important. And then, so if you're gonna, I don't know how many of you, JJ and I didn't talk, I guess, about this, or maybe I didn't pay enough attention, but if you say, look, we're in the middle of raising $200,000 in seed money, you're gonna have to, so sometimes you can say, we're not gonna value the company, because again, I don't wanna get into that today, but we're gonna use the money for biz dev and to beef up our technology, and we need to buy some software. That is what investors want to see, right? And so that's going to be, and you're to not only to show them what you're going to use the money for, but that it comports with your financial model and that you've raised enough money to get through it. So investment and use of proceeds is going to be important, right? So I picked some good, bad, and ugly. I don't know if you've seen these before, and I try to put some of these together. I think you get the hint. So we're going to get, so we're still on the, we're on the steak. We're not at the sizzle yet. We'll get there at the end, and we'll do that. We'll take a bio break in about 5 minutes, and I'm going to try to get to some of these really obvious examples of how not to do a pitch deck. So some of these companies, like this one is still operating. They've raised $18 million, and this was kind of their first pitch deck. This is how they describe their product and its history and milestones. I mean, it's unreadable. Oh yeah, the other thing is people with money, and judges, but especially venture capitalists, they don't look like you. They're not very attractive and 25 years old. They're older and they have money. So they don't want to squint. So you have to have at least a 30-point font or bigger. And don't cram everything in, because they're going to get angry, he or she, because they have to squint like I am right now to try to see these words. So you need to be much smarter and only put in things that are like really relevant, that are going to tell your story. Here is another, Nutanix. They raised $140 million for a total of $393 million in funding. I don't know if you guys can figure that out, but it's really ugly. Ugly, it just doesn't do anything for me. I have no idea. I get it. By the way, I'm not a real techie. I do a lot of tech deals. I can understand it if you tell me what it is in simple declarative sentences. But if I read something, I should be able to understand it. Like we're all smart enough to say, okay, I get what you do. You do storage, you do file systems. But when you do something like this, unless you have a subject matter expert in the audience, or be it a VC or a judge, it doesn't clarify. It confuses. It annoys people. Don't do it. Here is, so this is Airbnb. And this is we were talking about total available or addressable market, SAM, and then what share of that. Crystal clear, right? This is their first pitch deck when it was, I think it was, I don't know what their name was then, but, right, this is how you do it. And this was, this was 11 years ago. They raised that, and of course, they're off the charts. Although, yes, they will survive COVID, I'm sure. But this is how you want to do it. I don't like by the way, I do not like the subscript under the TAM, SAM, share of market, but everything else is good. And this is another one, Standard Treasury. They were acquired by Silicon Valley Bank. So we were talking about, give me 3 or 4 lines in your financials. Show me that you're going to go from $10,000 to $10 million over 3 years, or $5 million. And then, what we talked about, your KPIs underneath. This is ridiculous, totally ridiculous. No one wants to see it. Here's another one. This is Square. So you all know that Square knocked the cover off the ball. But they have this, I'm sorry, I should, somehow this is in translation. I don't have the whole slide on there, but it's supposed to be this circle of, virtuous circle and how payments work. And they use this gradation, purple gradation in their text boxes. It's ridiculous. It's hard to read. It's annoying. I don't want to have to hurt my brain to understand somebody's product and how it works. Very annoying. Don't do it. Okay, so now we're gonna, you know what I want to do? JJ, you tell me, but I think we should take a break here. And we can also do some questions, and then I'm going to get to how do you do a convincing pitch, right? How do you work with your voice and your razzle dazzle to get people to like you and like
all right, we can do that. You want to take like a couple of minutes and then we'll come back?
Is that all right with everybody?
Yeah, so we'll take a couple of minutes, and then do you want to do the Q&A right after you do that, or right after the bio?
Yeah.
Okay, So let's do that. We'll take just a couple of minutes. We'll be back at, right now it's 45 after the hour. Let's make it 47 after the hour. Just
No, no,
about.
can we do it five? Can we do a 5-minute break?
Let's do 5. There you go.
Yeah.
50 after the hour. So there
Okay.
you go. We'll
Very
be
good.
right back. All right. If you have questions, I'm here. So you can go ahead and ask questions in the Q&A box, and also you could chat. So you could go ahead and do that, and I'll be happy to answer any questions you may have. One thing I want to tell you is I just posted that. So we have the virtual lounge or virtual networking lounge right after this event. It is so it's going to start at about 10 a.m. So there is a link. We're using a different platform, and the platform is called Hio. We just put the link in the chat for everybody. Everyone that's already here on the webinar has been pre-registered. In case you are asked for a password or passcode, the passcode also has been put into the chat, and it is Kenobi 2020 VIP. And Kenobi is one of our sponsors. They are a law firm, intellectual property law firm here in Orange County. Again, if we're being asked if the slides will be available, we will send them to everyone, just like we're emailing you all the time. At the next email that we send to everybody, we will include the webinar slides for this webinar for everybody to be able to have. So just to let everybody know, at every webinar we have, right after the webinar, we will have a virtual networking lounge. And also we will also try to have a happy hour once a week. This week we won't, because we have 3 webinars in the same week, and there's a virtual networking event right after each webinar. So hopefully everybody can join that. It is a great place to connect with others, other startups, learn from them, they learn from you, and also many of the investors I see already here that are currently part of the webinar today. They are here to learn more about you, learn about your startup, and also help you navigate the startup ecosystem and help you succeed. That's why we're doing this entire event. We're not doing this event so you can get a check tomorrow when you compete. You're building relationships so that you can raise money down the road from people that trust you, from the relationships that you're building. That's how you should be thinking, and the networking is really a big part of this. Again, if you have any questions, please go ahead and ask them for me, and Barbara would answer specifically the questions that she can answer. So I have 2 questions I see. That's for Barbara, so I won't answer that. I'll leave it up to her. Also, you could chat with the panelists as well. You can send it to your chat to the panelists or to the entire list of attendees. I guess that's it. It's about 5 minutes. I guess I've been speaking for 5 minutes. John, you're asking the question, what was the speaker? I'm not sure. Is it Barbara Russell? She's coming back after taking a short bio break. Good to have you, John. John is a longtime member of Techos Angels, LA, and he's moved to San Diego now. But All right. So Barbara, you're back. You take the floor. We have a couple of questions. Do you
Yeah,
want
I
to take
see them.
those?
Sure.
Or did you want
Um,
to? Okay, go ahead.
well, I mean, the Peter Thiel one is too irresistible not to start with.
There you go.
Not my favorite person in the world, but I'm happy to answer it. That only losers have competition. Interesting. So, you know, when you think about it, I don't know what you want to use as an example, but yeah, there's some, everybody has to believe in themselves, right? I mean, if I have a pizza company, I'm up here in Boston, and if I have a pizza shop and I've decided to open a pizza shop, well, in Boston, there are thousands of pizza shops. I have to believe that my pizza is, I'm from New York, right? And people like me think Boston pizza is horrible because no one can make pizza like people in New York. So I would have to announce to the world up here in Boston that I am from New York and I'm making New York pizza, and I'm going to pin everybody's ears back in Boston and they'll never come close to me. And if I can actually execute on that and find a price point that will allow me to grab share, yes, I will conquer the competition. But if I walk in it and I raise money and I tell people I have no competition, they'll ask me to leave, right? They'll laugh me out of the room. So I'm not quite sure what he means by have competition. You might be able to, you know, wind up at the top of the mountain in terms of share or revenue or value, or however you want to however you want to measure your success. But that's kind of a preposterous misnomer, right? You can nail competition, but you'll always have competition. Laura, what's a reasonable market share to assume in your projections? So, you know, there's really no number, Laura. I'm on the board of an electric vehicle charging station company, and I've been on it for a while. And when we started in California, it was a man from Portland who was putting in charging stations, and we were coming up against ChargePoint and these massive behemoths. What we saw was that the massive behemoths were building charging stations like gas stations. And what we did, I just went along with the CEO, smart. I just said yes. He decided to go into multi-unit dwellings, like big apartment buildings, where millennials wanted Toyotas and they wanted EVs, and they wanted to charge them overnight. And he built market share, became the #1 market share of EV charging station companies in California and then Hawaii, because he saw something that ChargePoint didn't. And that was that you really want to go where the cars are. People don't really want to sit in filling stations, right, and charge their EVs for 3 hours and read a book. They want to do it overnight in their cars. So he wound up with a pretty high market share, right, which is it's probably like 20%, and the rest are like 18, 16, 14, 12 to get to 100. But, you know, again, your bottoms up approach is your best friend as opposed to tops down, unless you're Uber. I hope I answered that for you.
Well, like you said, do it both ways. It's great. Yeah.
Yeah.
All right. John Morris, longtime TCA member, has a question for you here too.
Okay. What is your advice to put the target funding early in the deck? How to advise entrepreneurs to discuss valuation. Yeah. So again, so we can talk about valuation briefly. I don't want to get into the weeds because it can be, there's a lot of ways to come up with valuation. Target funding early in the deck. I think what you need to do is you need to sink a hook with investors or judges early on. You have to get them excited. And it's not just about the money or what you need. You have a job to do, right? And you have to use your winning personalities and your great deck and your great product to electrify the audience. And then you're going to say, oh, by the way, so now that you're in love with my product and me, I need $1 million, and I'm going to raise it at, I'm going to give away 10% of my company with a post-money valuation of $10 million. You can do that later, but you need to sink the hook first. So I don't like to put it too early. Y Combinator has the best formula in the world. Until you get to an A round, use a SAFE, right? You don't have to have bells and whistles. A SAFE is it's a form of equity where you don't have to tell anyone what your valuation is. If you give me $1 million, once I price my round in a year or so, when I do a Series A, maybe a seed, and I price it, then I'll say, oh, by the way, you gave me $1 million. We found out that the company now is worth $10 million. So you automatically own 10% of my company, right? It's much easier to do that. So you don't have to hurt your head. You will spend so much time and energy on valuation for an early stage company. All you're going to do is argue about it with investors. It's not worth it. Do a safe, go look it up. You can find it online. Y Combinator does the documents for you. You can print them. You don't need a lawyer. They're so well vetted and they're so universally accepted. Anonymous attendee, I always get nervous because now there's no attribution. I can't yell at anyone. The suggestion is to not get too technical, but if your product is a therapeutic, its value is completely based on science and data. I feel like you have to show the data or else you might as well be pushing snake oil. Do you have any suggestions? Yeah, so we actually do some biotech deals. You know, you can always do, if you're mailing, if someone said, I saw your pitch deck at the National Venture Plan Competition. I loved it. You guys are onto something. I've been looking for a therapeutic like you're selling for years. Send me your deck. You can always put appendices in your deck, right? You can have a much full-blown financial model, and then you can do a very serious product description, especially for a company based in science and technology. It's not the right time and place to go deep in the weeds in a pitch deck. Tell them why you're onto something amazing. In a concise way, tell them what your approach is, very simply, and you have powerful data points without enumerating them. Because you just don't have time, and you're trying to create excitement. You don't have to verify. You just need to say, we have powerful data. We'd love to share it with you at a later time. And John Morris agrees with me. Don't mention valuation. Yeah, I mean, I think you should punt on that if you can.
All right, did you want to continue with what you were continuing with, or did you want to open it up to?
Well, I think, are those all the questions for now? Or, I mean,
Yes.
what I was just going to do is just to do a little bit of the, let me just do the share screen again.
Yeah.
Where were we? Sorry, it's right here. I'm going to go back to where we were with the sizzle. Hold on one sec. Let me go to show and go to, okay. So, I say sizzle and steak because it's an easy shortcut. Again, the sizzle. So this is really a guidelines, and we're going to get to how to present in a minute. But just if you stand back from anything, as we're humans. And do you remember when your teacher didn't show up in 8th grade, and all of a sudden a substitute teacher shows up, and they say, we're going to watch a movie, and everyone's screaming and yelling, yay, yay, yay. People really want to be told a story, and they want to be entertained. So when I talk about sizzle, and there's a lot on this slide, but it has to be compelling, right? It has to be, again, even with the biotech company, it has to spool out a story that I want to hear. Well, like an 8th grader wanting to see the movie. People want to be entertained, but they also want to be inspired. And they want to make money, but first and foremost, they have to be engaged. And so I always go with, how would you, if your best friends are in the room and they say, JJ, what's this company you've been working on? And you each have you have a beer in your hand on a Saturday night. You're going to tell them in words that they can understand what you're doing, like like the Twitter, just a tweet, how many characters. You're going to be able to say it. And again, I say, tell your story in the way that your mother could understand, right? Make it understandable, easy to understand concepts. And then the rest, I think we've already pretty much nailed The demo videos, anything that can go wrong, skip. Use screenshots, use mock-ups, but live videos. Oh my God, I've seen so many royal disasters of people that all of a sudden they're running around or they're calling their tech person because the demo videos crashed, right? And the other thing is ego. When you're authentic, you don't want to, there are people out there like Uber, for instance, that do have some ego maniacs at the helm. It doesn't go over well. It's like being with friends on a Saturday night, someone that's telling you how great they are. It's just not fun to be with them. It's not fun to hear an ego-driven CEO pitch. Tell them a story, describe the problem. You're able to solve the problem because you happen to have a set of skills and experiences that led you to a solution. It's not because you're a rock star. It's not because you're wonderful. It's not because you're really smart, which we hear a lot, and it's a turnoff. So no ego, but just be authentic and get your solution out there. Yeah, I thought I would show you. Did you guys, I don't know if you've ever seen the original. I don't know do you think that the slide share will come up on the, I think it will, yes. So let me go to.
If you're sharing your screen, it will.
Yeah, I know. So I'm going to show you, I am going to show you Facebook's original pitch deck, which I don't know if anyone's ever seen it, but I bet based on what we did today and based on obviously what you already know, you can just see. So this is spring of 2004. Mark Zuckerberg has not dropped out of Harvard yet.
We can't see it because you're probably sharing the window. You should share your screen.
Share my screen. Oh, darn it. Stop share. And I don't know if I can do this. Let me try.
You can share a screen instead of window. Yeah, that would work.
Okay. Yeah, I'm not sure how to do it, JJ. I'm sorry.
That's okay. You have the link, so we'll pass it along.
Yeah, so the link is in there. So, needless to say, it believe it or not, it was incredibly good. And I know Zuckerberg is kind of an odd duck, right? It's so well done. It tells you exactly, and I don't want to drill down on it too much because it's frustrating that I can't get it on the screen. I should have rehearsed it, but I've had a pretty grueling couple of days. He just went through everything, not as a pro, right? He didn't know any of this. He wasn't seasoned at the rubric of what we went through today, but he really nailed it. He understood his fellow classmates and what they wanted. They wanted to find out about other classmates. And he was a snob. He said, I'm only going to go to other Ivy League schools. And that was his specific, and his first market, his specific addressable market was Harvard, and getting basically bios and pictures of students. It's kind of a dating app as well, as you may know. And then he decided to go to the other 7 Ivy League schools. And then he expanded his market from there, and it was extremely well done. So I give him kudos, and there is a reason he succeeded, right? I am going to go back to the deck. From the current slide.
So maybe what we'll do when you're done is open it up for anybody who wants to actually pose a question live, or we can bring you live on video if that's okay with you, Barbara. Let us know. Yeah.
No, I'm ready.
Oh, you are ready. Okay, so anyone who has a question, you could just raise your hand, and if you want to come on video, you can, and we'll allow you to ask questions via video as well. If you still want to ask it via chat or Q&A, you're welcome to do so as well. Barbara, I'm getting a lot of great feedback. People emailing me and texting me. This has been amazing. Thank you so much.
Well, I never know. You know, sometimes even when I teach, because you know, I went to, I guess, decent schools, but there were always teachers that just would bore you to death. So I just really am trying to honestly impart what I've learned to make you better at these things like pitch competitions. So I hope that you take it for what it's worth. I don't want to lecture, but I want to share. I think I was trying to think of how many pitches I've done, pitch competitions. I think it's close to 1,000. I mean,
Oh, wow.
hearing pitches, not competitions. How many pitches I've heard in my lifetime? I think we're close to 1,000. So you do learn something, even if you're a little dense. It eventually permeates your brain.
Yeah, yeah. Oh, that's great. All right. Anyone that has a live question that would like to come on, please let us know, and we will turn the video on for you so you can jump in. Otherwise, if you have questions, please, you can post them in the Q&A, and Barbara will be able to answer them as well. All right, we have someone with a raised hand, so hold on, let me get there. All right, I don't know which one that is. Oh, okay, so I haven't done this before, so my first time doing this. I don't see the raised hand anymore. Oh, here it is. James, here we go, James.
Hi, Barbara.
Hi, James.
Great talk. Thanks a lot. Quick question. I understand that most people, like an investor, might have concern that they say the revenue growth the next few years. If they see potentially a hockey stick, they say, "Oh, this is not good." However, like in our projects, right? I mean, we definitely has this. I mean, we haven't really officially raised, but we really have great traction already, and we already see that the next 2-3 years we can really get to that level. There was some local, some kind of events. They also asked us to put it there, and we just put it like what we see next a year and two. And I think some people, like what you said, some like these are like I guess these local investors are. They say, "Oh, this is hockey stick." So what would you say? Like, we shouldn't put a slide with revenue projection, or we should just say, this is what our projection, or this is our revenue right now, and we see that we are going to have tremendous growth next year and two, but don't even put a number there, or what? Or just don't put a slide for the revenue? Because I saw like some people, like they put a slide just for the revenue, and I don't know whether it's pros and cons to put it there or not.
Yeah, no, I hear you. You know, that's a very good question. And some entrepreneurs, some founders, no matter how they slice and dice the market and their financial model in terms of how they can gain share, they can't avoid a hockey stick, right? All they see are revenues as far as the eye can see, and market share coming their way. There's nothing wrong with that. You may be onto some holy grail, some fantastic company, a great solution, the right product at the right time, you know, an Uber situation, and therefore you're going to have to defend that. And you will be dancing a very fast dance to describe that you have properly assessed the market and your product. You better say that you're a great entrepreneur and that you can nail this, right? That you could do this. There are situations like that where maybe it's a greenfield opportunity, right? That think of all of the tech companies in the last 20 years where there was no pre-existing technology, and they entered a greenfield and they were able to grab market share. I think of Mint. I think of all of these fintech companies and other tech companies where there was no predecessor technology. So do it, but just make sure you've done your homework on your marketing and your financial model. Thanks for the question. I see another one from, you want me to read the ones that I see?
Yeah, Randy, yeah, or Laura as well, yeah.
I just realized the importance of the visual and the market size. My SOM should be a dot, but it appears as one I have. If you're asking me about PowerPoint and the technology of PowerPoint, you are asking the wrong person. It takes me forever. I fortunately work with someone who is a rock star. I did some of the deck you saw today, which is why it's kind of clunky. I have no idea. You know, there's a lot of baked templates. You know, there's some great templates for doing a pitch deck. I highly recommend that unless you would love doing that, use a template. It'll get you there fast.
So there's a question before, Laura. It says, how little or maximum money can we ask for?
Oh, I
That's
see
a
that.
really
Yeah.
interesting question.
So again, I had to make an assumption that I stated at the outset of this presentation, which is, you know, I think you're in between, you know, like a freshman and a sophomore. I think I went over that slide quickly, where you have a minimum viable product, right? And you may even have revenues. You need to really show that you are raising the smallest amount of capital that will take you through 6 to 12 months out, right? Otherwise, if you raise too much, people are suspicious. And if you raise too much, unless you have a safe, you're giving away too much equity. It's really hard work. You are earning your equity by building a business, and you want 100% right now, unless you've raised money. And you don't want to raise too much money, right? If you raised 5 million at 6 million valuation, you're going to wind up with less than 20% of the company. Why bother?
Yep.
You're not going to be motivated. So you raise the minimum amount, and you know, so you have to be very smart. If you're going to generate $1 million in sales in a year, and you're going to have a 200,000 deficit, then you raise $200,000, right? And that shows how much you need to pay rent.
That's a great point, because a lot of people don't really look at it that way. That's a great point. All right, you got Randy Coonan.
Okay, competitor slide should be a plot which limits to a couple categories, or can it be a matrix, or both? Yeah, so that's good. So I like that XY axis one with attributes, right? So if the key attribute, you have to think of what the key attributes are. You know, with the lemonade, it's quality of the lemonade and the price, right? With Uber, it's you know, when you think about Lyft and Uber was clean cars and ready within 5 minutes. And price was probably another one. But you know, I think you can lay out several attributes in describing your product, right? That comes up against the competition. But when you do an XY axis, you can do 4 attributes. Think about it, right? But I wouldn't. Otherwise, you're going to hurt your head. It's going to be a 3-dimensional XYZ, and people are going to check out and zone out.
Do you mind if I add something? I think one thing that entrepreneurs don't look at or listen to or try to also show is the not only just the competitors, but the competitive advantage and the sustainability of that competitive advantage should be in that. Do you agree?
Absolutely.
All right, so we've got 2 questions from both TCA members. So they're in the Q&A. Do you see them, Barbara? If you open up the Q&A.
Yes, by the way, just to Laura's point, Canva is excellent. So good recommendation.
Yeah.
Do you advise founders to state how much they have invested in the startup themselves? You know what, I do, it depends. I do like that. It shows that, you know, you have skin in the game and you believe in yourself. You know, the guy that I told you about in Portland, Oregon, whose board I'm on, I'm also an investor. He put all of his, like, he made a lot of money as an aerospace engineer at Boeing. He's a black, very unusual, black aerospace engineer who started his own company afterwards, very quickly flipped it and started his EV charging station company. And we just didn't get a lot of meetings in the beginning. And I don't know why. I hope it wasn't because he was black. But then he started telling people, you know, I made $3 million in my last business venture and I sunk it all into my company. It got people's attention. So to your point, I think it's important to share that at some point. I mean, if you've invested $20, I probably would skip it. But if you've put something significant in it, meaningful, especially meaningful to you, it never hurts to bring it up.
All right. And then we have John, again, John Morris.
What is the time period you encourage entrepreneurs to cover in each funding? So that's good. So I just kind of brushed on it, 6 to 12 months. That's not, there's nothing etched in stone on that. You want runway. You want enough runway so that you don't run out of money. No one saw COVID coming last year, right? And the companies that have done pretty well in the tech space are the guys that raised like a year to a year and a half of runway. There's a lot of reasons you want to do that. If, you know, the biotech company I was just speaking to, they have very high burn rates. You don't get to revenues for 6, 7 years after you get FDA approval. So you need to raise a bunch of money, even though you're sacrificing the ownership of the company. So you need to have a lot of runway baked in, right? So,
So Laura's question, it's
how
about the
much?
runway. About
You know,
a
it
year,
depends.
I guess.
But Laura, you know, it really depends on what company, what kind
Yeah.
of company you have. You know, it's a delicate dance between, I don't want to give away too much equity because this valuation right now with my revenues as low as they are, it's not going to get me a big valuation. But if I wait 6 months, my revenues will be up and I'll get more respect and I'll have a higher valuation.
There you go.
It kind of, it's a little dance between the two. So there's no real set
So
number.
it's really an art and not a science, right? So
Yeah.
okay, we have Dan. I'm going to allow him to go ahead and talk. Here we go, Dan.
Hello.
We can
Dan.
hear you, Dan.
Okay. My question is a little embarrassing only because I feel like this is the only safe environment I'll ever have to ask it. But in our case, I don't know if this can be helpful to any other attendees, but there's a lot of talk about the value of the founder and the guy who conceived the idea. And our company is kind of maybe a high freshman. So sorry, I had to run to a spot to speak, so I'm a little out of breath. Anyway, I had like zero experience coming into this industry, and it was about 2 years ago. So I was able to build it solely on top of the fact that the felt need is pretty strong, and I brought in some pretty valuable partners. So I feel like we were able to get a decent presence with contracts. And I'm just wondering what is maybe like the most strategic way to leverage kind of that foundation that we've already built. Is that, you know, I didn't have any experience coming into it, but I have now 2 years of something that we built that's decent, you know, and we have actual contracts and, you know, licensing agreements and stuff.
So it sounds to me like your question really revolves around, there's a founder and then there are key employees once key hires are made, right?
Yeah.
And how do you begin to quantify the ownership of each of the founder and the key employees? And how do you treat everybody, those new employees, fairly in terms of what they're bringing to the party, right? So how to ascribe.
Well, more like how do I compensate for the fact that the person who conceived the idea didn't bring a whole lot of experience. It was basically just a felt need that I experienced, and we found like a huge gap in the market. And so I actually personally didn't bring a whole lot of value other than that I had a great idea and I built a decent team.
Yeah, you know, it's a great question, and there's so many companies that wrestle with that. You know, founders get a lot of credit, and as they should. Someone came up with the idea, had to put together the company, you know, whatever LLC or corporate formation they had to create, and then you probably had some kind of a business plan. You knew what you were going. You knew, even though you didn't have the technical expertise necessarily, you could see, you had the vision that there was something, that there was a market, right? There was a need, there was a problem.
Absolutely. Yeah, exactly.
And so, you know, it's your company. And so if you say, look, I own 100% and I just brought you guys in and, you know, let's start, you earn outs are your best friend. if you say, if you guys can bring in X amount of sales or whatever you're going to use as a KPI, key performance indicator, if you can get to this level, I'm going to pay out 20%. And you over there, I'm going to pay out another 20% if you can get us there. Or just joining the team, they may have gotten 5%. But normally it's a 3-year, you know, I don't want to get technical. It's a 3-year earnout, a waterfall, right? So if you look online, there's ways to do this in a hard-headed scientific way, just to do earnouts for key employees.
Yes, yeah, and we definitely we researched and structured that, I think, the smartest way possible. I'm really more concerned about how do I compensate for that as I'm pitching. You know, how would a venture capitalist view that in a positive
You're a founder,
light?
Dan, there's tons of people like you that, you know, that have founded biotech companies that don't have any science degrees.
Okay, great.
Right?
Yeah, that's encouraging because you know, we're real fresh to the VC. We were bootstrapping the whole time, and that was always our plan. But this competition seems like a real great opportunity, and albeit we're extremely green in this environment. So yeah, that's encouraging. I appreciate that.
Sure, my pleasure.
Yeah. That's
All
it.
right, well, thank you very much, Dan.
Thank you.
I think that's all we have here. All right, Barbara, I think we're good. So we've answered all the questions. We brought people on for interactive video and chats as well. So that was really great. I really appreciate you being here. That was absolutely awesome. Thank you so much.
Well, I wish all of you the best of luck. I'm sure you'll all win in your own way. And it was a real pleasure to be able to talk with you today. Thank you so much.
Thank you. Everyone, you can join the virtual networking lounge right after this. And Barbara, if you want to join there, we sent you the link yesterday. You can click, it's hiosocial.com.
Yeah, I'll join for a while. I have a couple things I must do, but I will come back and do that. And thank you again. I really enjoyed this.
Appreciate it very much. Everyone, we'll see you soon. If you have not finalized your application, please finalize it before this weekend. Thank you.